What we are seeing today is unprecedented in terms of worldwide financial instability. The world faces the possibility of an economic collapse that could destabilize the lives of millions of people. Now, having said that, there are ways to make money, and that's what this episode is all about. It's about understanding what is happening today, looking into the future, and taking action to profit. And look, what I'm going to share with you today is not about scaring you. That is not my intention at all. Because what I always say is what you are aware of, you can control and identify opportunities. What you are not aware of will always control you. So this is a very important show. So stay with me. This could really open your eyes and perhaps change your life. Hi, welcome to another episode of Wired for Wealth, guiding you to achieve lasting financial freedom and peace of mind. I'm your host, John MacGregor, your antidote to your financial struggles. Now, if you haven't already done so, you know what to do. Ring that bell below and hit subscribe. You don't want to miss future episodes. All right, so let's dig in. So for today, I want to focus on the United States because what happens here will have a cascading effect everywhere around the world. Now, having said that, what is happening here is happening everywhere. We're all dealing with massive inflation, right? In fact, our inflation here has hit an all-time record. And the Fed created this. The Federal Reserve created this mess. And it all started back in the housing crisis in '08. The Fed has been using a monetary policy called quantitative easing, or QE for short. Basically, it's printing fake monopoly money as a way to artificially keep interest rates low to prop assets up, like the bond and stock market and housing as well. But here's the problem. They never stopped quantitative easing. For years, they've been keeping interest rates artificially low, propping these asset values up like a bubble. Suddenly, they woke up and they realized inflation is here. And at first, they said, don't worry about it. This is temporary, or they used the term transitory, if you've heard that. But then later, they acknowledged, wait a minute, this is a big problem that we did not anticipate, and it's not going away. Now look, these are the smart people in a room, right? They're supposed to know what's happening and what's going to happen. They didn't see this at all coming. It's absolutely crazy. I mean, if you just watch some of my previous videos, I called this a long time ago. It was so obvious, and I wasn't alone. Thousands of other people saw this coming. I mean, it was just so blatantly obvious. Now, of course, what would you expect? Biden blamed everyone but him and his administration and his policies. He blamed Russia and COVID. Now look, Russia and COVID didn't help the situation, but they are not the cause of this at all. That is just a bald-faced lie. Inflation is a monetary issue caused by bad monetary policies because only the Federal Reserve can print money. That's what causes inflation. Too much money chasing too few goods and services. And oil was surging long before Russia invaded Ukraine. Oil started surging as soon as Biden took office when he went after the oil industry and basically said he was going to put the oil industry out of business. That's what started sending oil through the roof, not Russia. And as it pertains to COVID, it wasn't the COVID virus itself that caused problems. It was our insane and draconian response to COVID that threw kerosene on the fire. These ridiculous lockdowns, business closures, mask mandates, 6-foot distancing. I mean, how ridiculous was that? Schools closing. I mean, just think of how ridiculous all of that sounds today, knowing what we know. Then, on top of all this, Biden went out and printed $5 trillion with a T, $5 trillion in the past 2 years and flooded the economy with fake money, again, chasing fewer and fewer goods and services. Look, Basic Econ 101 will tell you too much money chasing too few goods will result in inflation. And thank you, Janet Yellen, arguably the worst Treasury Secretary this country has ever seen. It is the perfect storm. And now, as a result of all of this, the Federal Reserve, Jerome Powell, who heads the Federal Reserve, is backed into a corner. Powell can continue to raise rates as he said he would to tame inflation. In other words, quantitative tightening, not quantitative easing, but quantitative tightening. But that will have devastating consequences on the economy and our debt, which I'm going to explain to you in a moment, how devastating that can be. Or on the flip side, Jerome Powell, again, the head of the Federal Reserve, can slow or stop raising interest rates and go back to quantitative easing. Now, he's not going to admit to it, but he'll do it in a way where he'll come up with all types of excuses in order to stimulate asset prices, again, stocks, bonds, housing, and all those kind of things. So Powell is kind of caught in between inflation or a recession. In reality, he's really caught between inflation or a depression. So what's the better of the two evils? Well, my take is that inflation be damned. And here's why. Inflation is measured in year-over-year price increases, right? In a year, the inflation numbers won't look as bad because if a carton of eggs is up 20% and stays there for a year, and the following year that price doesn't change but still up 20%, they can say that inflation on that carton of eggs is 0%. You follow me there? So that's the game they're going to play with inflation. And I think Powell's thinking that, well, people are going to get used to these high prices, so inflation isn't really his target enemy that he wants to go after. He wants to stimulate the economy, get those asset prices back up so he can look good in front of his boss. Also, keep this in mind. The Fed is very political. Number one, Powell does not want to go down as the Fed chairman who destroyed the US economy and put us into a depression. Number two, Powell wants to keep his job, right? Number three, his job is to make his boss look good, or in Biden's case, not as bad as he actually is. So that's why I say the Fed is very political. They're not so much, well, they're certainly worried about the economy, but they're also worried about the perception of what they're doing. So I believe Powell will pivot. That's why I call it the Powell pivot, and really slow down the interest rate increases and the size of those increases. The pension managers are begging for this. They are getting squeezed big time since they invest in the stock, bond, and housing market. And pensions around the world were already underfunded. And now with the bond market blowing up, the stock market tanking, the housing market on the decline, they need a lifeline. And it's getting harder and harder for them to honor their pension obligations when the bond market's down, the stock market's down, gold's down, and housing's down. I mean, just look at the United Kingdom, right? The UK pivoted on a dime and reverted back to quantitative easing after assuring the public they would continue to be aggressive on taming inflation. I mean, they pivoted on a dime. All that went out the door because the pension managers begged the Bank of England for mercy. And I think Powell sees that as his opportunity and confirmation to do the same. But here's the bigger story. This is the 800-pound gorilla in the room that no one's talking about or paying attention. Right now, the US is drowning in debt to a tune of over $31.2 trillion and counting. The gross domestic product, or GDP, which is a measurement of the total market value of all finished goods and services in the US, is expected to hit $24 trillion. This puts our debt to GDP ratio at 130%. That means we owe far more than we produce. That is not good, folks. And if you haven't seen this, take a moment and type into your web browser usdebtclock.org, usdebtclock.org, to see in real time our national debt and how fast it's growing. It's absolutely mind-blowing. And you can scroll around to see some of the other horrific numbers as well, as including unfunded liabilities or federal spending, personal debt, among others. You can see them in real time going up. It's an absolute horror story. And if that doesn't waken you up to get serious about that, nothing will. And if you want to see your country's debt, go to the top left of that page and click World Debt Clock. It's simply astounding. Look, all this debt, this is unsustainable for obvious reasons. This debt balloon cannot continue to expand without a massive burst in the near future. And the real problem we have with all of this is interest rates, because all of this debt, if interest rates continue to rise, the entire system will collapse. It's inevitable. It's just basic math. As a country, the US government brings in approximately $4.6 trillion in revenue. Remember this. The US government brings in $4.6 trillion in revenue every single year. That varies a little bit, creeps up a little bit higher over time. Of that total, The US spends $1.3 trillion on Social Security. They spend $1.2 trillion on defense or military, $1.6 trillion on healthcare, and another $500 billion or half a trillion on welfare. Add those four things together and you're already sitting at $4.6 trillion, the same amount that we bring in. Remember, those four things that I just mentioned, those four expenditures I listed, I'm ignoring the cost to fund education, protection, transportation, general government expenses, and another category called other. And here's where it gets even scarier. In fiscal year 2021, when interest rates were basically close to 0%, interest payments on our national debt was $378 billion. Remember, we bring in $4.5 or $4.6 trillion. Our interest back then, with interest rates at zero, was $378 billion. Now, fast forward, we've seen the interest rates rise. With the 10-year Treasury rate sitting at over 4%, interest payments on our $31.2 trillion in debt will be over $1.3 trillion. Add that to our $4.6 trillion in expenses I mentioned earlier, and you're now at $5.9 trillion in expenditures. And that does not account for those other things that I left off: education, the general expense fund, healthcare, and other things. It's absolutely horrific. Now, the increase in interest payments wouldn't happen immediately because a lot of debt is still locked in at lower rates. But as bonds mature, they would have to be replaced and refinanced with new bonds at our new higher interest rate. Make sense? As interest rates continue to rise and our debt continues to increase, this will put even more pressure on the entire economic system. And again, this is not just a US phenomenon. This is happening countries around the world. Rising interest rates will continue to weaken the economy, and that alone will increase the debt because they will have to borrow more money to keep the economy functioning. Following me? So all that new debt will have to be financed at higher interest rates. And the current sentiment of many, including myself, is that our national debt will hit $35 trillion by 2023, if not 2024. If in any case, it's imminent. And if interest rates hit 6 or even 8%, which is very possible, the annual interest payments needed to service our national debt would exceed most, if not all, of our expenditures. In other words, think of this. Debt is growing at such a fast rate while interest rates are rising, creating a scenario where interest payments on our debt will exceed all other government expenditures. Once we pay the interest, there will be nothing left for anything else. Economic expert and financial commentator Peter Schiff tweeted out, "At the rate the national debt and interest rates are rising, before the decade ends, interest on the national debt will exceed 100% of federal tax revenue." He goes on to say, the entire federal government would then consist of the Treasury Department, which would just collect taxes and pay interest. I mean, think about that. All money collected would then just be shifted to pay interest on the debt. Nothing else for any other government program. Nothing for Social Security, nothing for healthcare, nothing for protection, nothing for defense, nothing for welfare. Nothing. All goes towards debt. This is coming. This is not fantasy. This is reality. And perhaps this is why, it's probably why the Biden administration is hiring an additional 87,000 new IRS agents, basically to pillage Americans' bank accounts and really just shake us for everything, shake us down, basically. As a result of all this, I strongly believe that Jerome Powell, he's going to pivot, as I said earlier, on his hawkish stance in taming inflation and basically not ignore inflation, but he's really going to focus on the economy and propping up these assets. This is why I call it, again, the Powell pivot. So in all of this, where can you make money? Where am I putting my money right now? Well, given my forecast that the Fed will pivot to a more dovish stance in inflation and slow down its rate hikes, I see interest rates and the US dollar dropping in value versus other currencies. So this would be an ideal environment to own gold and silver. And just to be clear, I am not a gold bug, but I do believe in this economic environment not to mention the geopolitical risk we have and all the tensions we have around the world between Iran and North Korea, Russia and China. I mean, things are really escalating. I think gold is an ideal place, particularly if we're seeing the value of the dollar drop. Second, I like the oil sector. This is simply a supply and demand play. The more the Biden administration continues to stifle or kill oil exploration and drilling, we will continue to see supply pressure, thus rising prices. Biden will also have to replace the 200 million barrels of oil he released. And let's be honest, he released it as a political gimmick to lower gas prices right before the midterm elections. And also in China, which is still in lockdown, they will need a lot of oil when their 1.4 billion citizens are free to drive and travel and roam around, right? And lastly, to confirm this, my bet, Warren Buffett just took a 20% stake or close to that in Occidental Petroleum, a leading oil company, a stock I personally own as well. And plus, many of these oil stocks pay a very nice dividend. So that's my take there. Lastly, as a way to create income and capital appreciation in any type of market, I use a simple stock strategy that consistently generates thousands of dollars per month in cash flow in any type of market environment. I like options because they can generate consistent cash flow on a weekly and or monthly basis and capture capital gains in a fraction of your time. You can leverage your own stocks in your portfolio. I like options because you can place a cash insurance policy on your portfolio. You can also hedge your portfolio against market losses, and you can reduce risk in your overall portfolio. So that's why I like options. So those are the three things: gold and silver, and there might be other commodities in there as well, oil, and I use options as a way to generate cash flow and lower risk in my portfolio and capture capital gains. So I'll wrap up there. By the way, I would love to hear your comments. What are you seeing out there? Any investments you like in this type of environment? Let me know in the chat. Love to hear from you. Lastly, I will say I just released my audiobook on my website titled Unlock Your Money Code, Master Your Mind, and Live Your Rich Life. And for an audiobook, as you know, these are expensive. We're offering at a very special introductory price of $7.99. It's well worth it. So with that, till next time, upward and onward. Take care. Bye-bye.